You're already cooler than Gary, Lawrence, just quietly.
Gary's pretty cool.
Hey, Yellow's naked then.
Subscribe to
Hey.
Simply Bitcoin.
Yellow. Hi, Yellow.
That's a pretty cool avatar.
Welcome, everybody. Welcome in. You made it to another episode of the Meme Factory Podcast. This is test stream number 52. Anybody who's watched it with any regularity knows there will never be a real stream, only test streams. That way we can't get canceled. This evening, we are graced by the presence of Lawrence Lepard. Now, Lawrence lets me call him Larry because we've been friends for the better part of 40 years here. But he said the other guys can call him whatever they want. Now, for anybody who doesn't know who you are, Larry, could you give us a quick introduction?
Yeah, sure. So I, just since you said your age, I'm 65. I'm a sound money investor. Before Bitcoin, I was a gold investor because Bitcoin didn't exist. And I think that central banks are kind of the evil of our time. And the issue that we're addressing in this fourth turning is unsound money. And so I think Bitcoin and gold are natural allies in bringing down the fiat masters. And I run a fund that focuses on those areas. And then I'm also pretty much a loudmouth on Twitter and a lot of shit posting and taking shots at the central banks, trying to stir the pot. So
that's what drew me to your account in the first place. It was the shit posting.
Yeah, it's good stuff.
All right, now,
I mean, you got to laugh. It's a pretty screwed up environment we all live in. You got to have some laughs, right?
Unbelievably screwed up. And yeah, laughter's the best medicine.
Yeah.
Now, you are a freshman to our show. One of the idiosyncratic features of this podcast is that the sponsors require the guests to actually read the ad copy so that we can get paid. And since getting paid is more important than anything else on this podcast, I've DM'd you the ad copy from the sponsor. If you could go ahead and read that.
Yeah, I'd be happy to. I love this ad copy. This is fabulous. Okay, so here we go. Hi, everybody. My name is Larry, and this episode of the Meme Factory Podcast, trademarked, is brought to you by Paper Gold. Paper Gold is one of the best performing assets of all time, and my new fund, Paper Me Harder Daddy, will finally give our clients unprecedented exposure to this amazing asset class. For centuries, banking institutions have been increasing their bottom line and scooping up distressed assets with this one simple trick. Now the asset managers at Paper Me Hard Daddy Gold can employ this trick for you. What trick am I talking about? Issuing receipts for more gold than we actually have on deposit. But isn't that lying, you might ask? Well, yes it is. That doesn't seem legal might be your next observation, and that's a good observation. It's not legal at all. But it is also not enforced, so we're making hay while the sun shines. So come join us today and earn 10 times what you have on deposit in your first year while we shuffle some paper around for you here at Paper Gold. All right.
Hey.
All right. Larry, that was fantastic.
Hey, thanks.
Yeah.
They're actually our largest sponsor to date.
Yeah, right. Well,
they said they were gonna send 50 Bitcoins our way. I don't know if there's a difference between testnet or regular Bitcoin, but I'm excited.
I think you're going to be waiting a while for those guys. I mean, just to put that, I mean, they are the largest sponsor. To put in perspective, some of your listeners will, I think, enjoy this. How much paper gold there is, and how much gold has been suppressed in price. When we were on the gold standard pre-1971, you could take a major monetary aggregate and you could divide it by the amount of gold the United States had, and you came up to about $35, which was the set price from Bretton Woods in 44. And today, if you did the exact same calculation, so in other words, if you imagined we were going back to 100% coverage of the paper that's outstanding with the gold that we hold, the gold price would need to be $80,000 an ounce. And if you check, you can see it's roughly $1,700 an ounce. What that shows you is how much paper we've created, paper money, fake money, fiat money, we've created as against the gold balance the United States owns. And that's all been done by the powers that be in an effort to protect their privilege and the cotillion effect that they get as a result of controlling the system. It's fucked up. It's way fucked up.
It sounds like a hell of a business to be in.
Oh, yeah, it's great for them. I mean, as I'm sure many of your listeners saw, JP Morgan, paid $900 million worth of fines, and I'm sure that was a fraction of what they earned by manipulating it, during the many years when they've manipulated it. And my My sense is they may still be manipulating it, but that's a different story.
Well, I mean, if you're only going to get a $900 million slap on the wrist and earning billions upon billions in profits, that's hardly a stop here, don't do anymore signal, is it?
Yeah. Well, what I want to know is when's somebody going to jail? I mean, when, you go steal from a corner store. Well, not today, but at least until the rule of law fell apart in the United States.
Yeah.
If you stole, you went to prison. But not if you're a white collar criminal. You're good.
So Larry, Yellow here. How are you?
Yeah.
I saw you today. You were sharing what everybody shared. Like today, everybody's talking about the American government and the report they did about the Bitcoin mining.
Yeah.
And how they say it.
Yeah. Go ahead.
So we see like contradicting signals from the government there. Like the Wall Street guy seems to want to use Bitcoin and profit from it. The government like now are saying proof of work is a bad thing, maybe. So how do you see it? Any comment?
Yeah, well,
on the newest development?
I retweeted that report. I've been so busy today, I haven't had a chance to read it. I did read some of the comments by other Bitcoiners on it. I think there was some good stuff in there, and I think there's some bad stuff in there. I think they did recognize that the mining had the ability to maybe balance out load on the network, and that was a positive thing. But I think they also said that they thought it was a big energy drain, and if it continued and wasn't regulated in the right way, they should, come down on proof of work as a mechanism for securing Bitcoin, which of course would be an unmitigated disaster and highly illegal. But that doesn't mean they won't try it. So, look, Brent Santiago had a very good tweet today. He said, anybody who thinks that the government's not going to fight back hard against gold and Bitcoin as alternatives to the U.S. dollar is just being naive, and I strongly agree with that. I mean, and I know because I've seen it happen. I mean, I've been in the gold trade since the early 80s, and I've seen, the way they change the rules, the things they do. I mean, many people will know, some won't, the story of the Hunt brothers. I mean, they had the silver market cornered. They could have brought the whole thing down, and they changed the rules. They shut the exchange, made it liquidation only, upped the margin requirements, and they bankrupted the Hunts. So, when it comes to having the reserve currency and protecting the reserve currency, we all have to understand and assume that the people on the other side of this trade are going to play dirty. I mean, they do it over and over. I mean, look.
Didn't something similar happen to you in 2008? Didn't you have?
Yeah, so exactly. I was going to say they did it to me. I was ahead enormously in 2008 by being short the financials. I had the Michael Burry trade on, but I didn't really know about CDS. I wasn't big enough, and I couldn't get a Wall Street, derivatives license. But I was short all the things he was short, all the financials. And in September they outlawed it, and they turned what should have been an up 50% year for me into a down 6%. It cost me and my clients millions of dollars. They just changed the rules in the middle of the game. And I mean, and we see this recently, like with GameStop. They changed the rules there. I mean, I don't know if you recall, it was earlier, probably in the last 6 months. Yeah. The zinc thing. I mean, they had, the zinc.
I thought it was nickel. It was zinc.
Or maybe it was nickel. I apologize. You're right. It was nickel. I've got zinc on the mind because I'm in a zinc miner. But
it's all right. I accept your apology.
Yeah, I mean, but the point is, they were in trouble. They couldn't deliver, and they changed the rules. And so this is standard operating procedure for these guys. So they're going to fight dirty, and they've got control of the internal mechanisms, right?
Well, they're going to fight dirty. History doesn't repeat itself, but it often rhymes with the GME trade, the nickel trade, the CDS trade, all that fun stuff. So is there anything about Bitcoin that makes it different from those other assets?
It's definitely better. I mean, we can see the chain, we know where they are, etc. But it's not. Some Bitcoiners think, because of that, and it's absolutely positively unmanipulatable, and that, in my opinion, that's not completely accurate or completely true. And the reason is because there is, just like there's paper gold. I mean, the GLD, gold ETF, I believe, was established to suck off demand for gold. So people would want to buy gold, they'd buy GLD. GLD wouldn't really go buy the actual physical gold. They just collect the money and say, we're going to mark you up or down based on what the gold price does. Okay. And so it's a derivative. It's a derivative of the underlying metal. The same thing is going on in Bitcoin, not nearly to the scale that it's gone on in gold, but if you go to Glassnode and you can find the actual amount of Bitcoin derivatives. There's paper Bitcoin. I mean, all of us who are Bitcoiners are smart enough to know that if you don't have the keys, it's not your coins, right? Mm-hmm. But there are people who are willing to buy a futures contract on Bitcoin. The CME trades them. There are people who are willing to do private, paper Bitcoin transactions. And if the paper market were ever to become large enough, I mean, in the gold space, we believe the paper market is probably 100 times the size of the physical market. And so they're really running a huge fractional reserve gold market, which if we're to, it's like musical chairs. If the music were to stop and everyone who thinks they own gold was to say, give me my ounces, there wouldn't be enough ounces at this price. They'd declare force majeure and they say, sorry, we're going to settle, GLD gets settled out at, let's say, for example.
Can we back that up just 1 second? I don't know what force majeure means.
Okay. It means the rules have changed, exceptional. So it's what they did to the Hunts.
Okay.
It means the rules have changed, exceptional circumstances. Sorry, thanks for playing, but we changed. It's what they did to me on the short, the financials. They just changed the rules in the middle of the game. So what they could do is they could say, let's say tomorrow, Russia and China said we're moving to gold standard. We're going to price gold at $10,000 an ounce. Okay, so suddenly everyone who owns gold would think, oh, gee, my gold just went up in value 5x. Well, the GLD, recognizing they don't have the gold they say they have, could say, oh, sorry, force majeure, rules have changed. We'll pay you out at yesterday's price. So if your gold is at $1,700, we'll send you a check for $1,700, and you just missed the 5x appreciation that took place as a result of the revaluation. God. And so as I say, Bitcoin has the risk of having some of this happen as long as derivatives are around. Having said that, the good news is, and there are derivatives players operating in the gold market to hammer it at certain times, and it's been, this is why J.P. Morgan was so heavily fined for manipulating gold. But gold is easier to manipulate because it doesn't go up 5x in 5 months. I mean, and so if somebody gets on the wrong side of the trade, I mean, I think for national security reasons, the Treasury and others behind the scenes bail out somebody who's short gold if they went short gold at a time when the government told them to go short gold.
Well, and also settlement in gold takes a lot more time than it does for
settlement takes more time as well. But, gold doesn't go up 5x in 6 months. So when Bitcoin, and as you recall, in the fall of 2020, Bitcoin went from 10 to 50. So in a very short period of time, you had a 500% appreciation. That makes it less easy to manipulate, because if you want to, if you're told by the government to get on the short side of Bitcoin to hold the price down, and Bitcoin does a 5-bagger, you're in deep shit unless the government bails you out, right? Whereas in the gold market, if gold goes up 30%, you're underwater. Government says, don't worry, we're going to bring it back down and we'll cover your loss. You can do it. So, as I say, and they've had a lot of time to perfect the gold manipulation scheme, and Bitcoin has come on the scene very quickly, moved quickly, and I got to tell you, I'm almost positive that when Bitcoin went from 10 to 50,000, there were alarm bells going off in every finance center in the world, like, holy shit, this is a wild beast. We got to get this under control. And
do you think that they think it's under control now?
I don't know. I don't know that they do, but I do know that they're active. I mean, one of the things, and Caitlin pointed this out with a great chart she tweeted not that far back.
Caitlin Jenner?
No, Caitlin Long. Yeah, right. Caitlin Long, who runs Custodia. The last cycle didn't go as high as it should have gone. It was truncated from what she can see, and it looks like they had a lot of guys trading it as an alternative to the triple Qs, and so
the triple Qs being ETFs of the major U.S. stock exchanges.
The ETF of all the big tech stocks. So, it's Wall Street had definitely gotten into the game, and once Wall Street brings in the leverage, then they can play the game, and they were and are. So it's not manipulation free is I guess the point I'm making. I think ultimately, there's a fixed number of coins, and I don't think they can build a derivative wall quickly enough to hold it down. And I think on the next run of sound money assets is going to, shake them to the core, because, I believe in the next run we'll go to 200,000 a coin. So
if you had to, and Rusty, I see your hand. Hi, Rusty, we're coming to you. But if you had to guess when the next run is gonna come, considering all the crazy stuff happening in the world?
Yeah, it's very, very hard to guess. It's nothing but a guess. But
Yeah.
I'm pretty sure within the next year, and I think maybe within the next 6 months. And
Oh, really?
in terms of how it's likely to unfold,
And you're saying this with 100% confidence, right?
yeah, right. I said it's a guess, but
I expected not that soon actually. Yeah,
yeah, I say with pretty high confidence. The reason is Europe's blowing apart, but we'll get to that in a minute. The issue that I think is going on is that the right now everyone thinks we can return to a low inflation environment, and we can't, and we won't.
Nope.
And once that changes, or once the economy and the markets start to break in a way that causes the Federal Reserve to blink, our stuff's going to take off like crazy. And I would point out, it's my opinion that gold will lead. If you actually look at the 2019 and 2020 period, gold took off. I had friends who were 100% Bitcoin. I was about half and half personally. I was balanced. And it was very frustrating because the gold was working great in 2019, 2020. Gold could smell what was coming. Bitcoin was just kind of sitting there. It was bouncing around between 5 and 10, driving us all nuts. And so gold led.
They hit an all-time high in the summer of 2020. I remember that.
Exactly. It hit an all-time high at 2050 in the summer of 2020.
Yep.
And then, but Bitcoin was going nowhere. And everyone in Bitcoin land was like, what the hell? Gold's taking off. Our shit's not. And then suddenly Bitcoin came running from behind and went from 10 to 50. And all the gold guys were like, holy shit, look at that. And so my point is, gold is being more widely distributed, and I think having a better nose for what's going on, it'll move first. So if you're a Bitcoiner, what I think you ought to do is you ought to root for gold to take out 2000 with authority. And I think when it does, you know that Bitcoin's going to follow and go much farther and faster. So gold has bumped up against 2000 a bunch of times, and all the algos are set to program 2000 as the top, 2050-ish as the top. Gold hit 2000 in, most people don't know this, in 2011. And then it corrected from 2000 down to 1000 in 2015. And then it went back up to a 2000 level in 2020, coming out of the COVID thing when they printed like crazy. And then it touched it one more time early this year. So there's no such thing as a triple top. So we're going through 2000 on gold. And when we do, it's going to be game on. And at that point, gold's going to squirt up to 2,500 or 3,000. I think by then Bitcoin will be trading in the $30,000 to $40,000 range, and then it'll do the typical Meyer multiple of 5x the average, which is running about 40,000 right now. So that'll take it. It'll squirt from 40 up to 200. That's my opinion.
I think Larry. I think Rusty might have an aneurysm if we ignore him much longer. Rusty, do you have a question?
Hi, Rusty.
Hey, Rusty.
Rusty, you've got your hand
morning.
up. If you'd like to ask a question, now's a great time.
Thanks, Pedro. Hey, Lazar. So I was wondering about the Bitcoin ETF, so if a spot ETF comes along, is it just going to cause more paper issues, or is it going to fix it a little bit, or is it just going to do the same thing as GLD?
Yeah, so that's a great question, right? And I have a theory about this. I don't know if it's right, but it's my belief that's why they're letting, that's what BlackRock's, when they've been pushing back on GBTC, I actually happen to think the GBTC guys are honest, and they have the coins they say they have. I mean, I know it's not your keys, not your coins, but I think they really legitimately have those coins because I know the people there. BlackRock, on the other hand, I know they're not honest at all. They're very dishonest. And so, and they're, getting into Bitcoin, the clients are pushing them into it, et cetera. I think there's a good possibility that they will actually be granted the first ETF, and that tells you something, right? Because it'd be very easy for them to suck money in there and not buy the coins.
Just rehypothecate.
Yeah, just rehypothecate. I mean, it's paper Bitcoin, right? I mean, they we'll have to read the prospectus when it comes out. But if you read the GLD prospectus, what you see is that they have the ability to buy futures and contracts and have counterparties and everything else. And, it's not that GLD has no gold. They obviously have gold. It's just that they also have a lot of contracts from other people to deliver gold to them. And guess what? Some of those other people look like Lehman Brothers. So that when gold goes to 10,000, they're not going to deliver the gold. So, and that's why they're going to have to declare force majeure.
Yeah, I think like Kraken, if I'm not mistaken, they actually did a proof of reserve. So they showed how much Bitcoin that they have. And there's other places that have done that as well. So it'll be interesting when you have enough big exchanges that show proof of reserve and show how much Bitcoin they have. And then you could actually see from how much Bitcoin is mined and how much Bitcoin we know are in some big reserves. You could actually see if someone's putting a naked short on Bitcoin, or if there's so much paper Bitcoin out there that's more than what's ever been mined and what other people have in reserve. And you'll be able to tell that pretty fast.
No, that's right. And that is one of the big advantages that Bitcoin has over gold, that you've got this ledger that you can see and that you've got these futures. I'm not quite sure where Glassnode's getting its data, but I'm led to believe that it's pretty good. And yeah, I mean, look, if you look at the amount of Bitcoin float that is out there, it's really not that large.
Yeah.
I mean, there are a large number of the coins that haven't moved in over a year. I mean, we've got to assume that 21 million, and we've got to assume that maybe 3 or 4 million of them are lost, right? Because early days, people lost their keys. So, we're talking
and
maybe
Yellow lost his keys too.
Yeah, we're talking a float of, maybe a couple million coins.
That's actually a question I have on that, Larry, if I may.
Sure.
Back then, when Mt. Gox was like 90% volume of the Bitcoin ecosystem back then, and everybody understood that they don't have the keys, right? The price of Mt. Gox and everybody elsewhere, like all the other exchanges, like decoupled. So if something similar happened with a so-called BlackRock spot ETF that rehypothecates like crazy, like, is it possible to see price decoupling there too?
I think so. I mean, it's, look, an ETF could always, in theory, decouple. I mean, GBTC is a closed-end fund. It has been decoupled. It trades at a 20 to 30% discount, even though I believe they have the coins. But yeah, I mean, it's, look, I think the best thing we can all do if we want to keep the price of Bitcoin pure, what we should encourage everybody who's participating in it to do is get their coins out of the exchanges and into their own self-custody, cold storage, because that's what's really gonna, I mean, then they can't take them away, and sure, they can create paper Bitcoin to maybe push prices down, but that doesn't necessarily mean that that's the real price. I mean, I said that on a podcast I was on earlier today. I mean, to me, the price of everything today is wrong. I mean, we know that because the money's broken, so you don't really know what the real value of anything is today. And so, what you've got to kind of think about it. I mean, pretend like you're Warren Buffett. Like, you don't get to trade for the next 5 years, right? All the prices are wrong. What do you want to put in your house or in your basket of investments, and that when you wake up in 5 years you'll be okay, right?
Beanie Babies.
Yeah, right. Well, whatever it might be. I mean, food, a house, guns, things like that. Those are all very useful things to have, a car, etc. But I think when it comes to financial assets, I mean, to me, it would be gold, silver, Bitcoin. I mean, I know what they are. They're not changing. They represent money, and they will always represent money, in my view. And in the case of Bitcoin, you've got not only the fact that it's the soundest money ever devised, and it's technologically superior to gold, but you've also got the fact that it's on a big adoption curve, and there are 8 billion people on the planet. And I don't know what, it's hard to know the exact number, but maybe 100 million on some Bitcoin, maybe 200 million.
I've heard numbers like 10 and 25% thrown out. And are they talking about like percentage of the total population in the world, or?
Yeah, I don't know. I can't imagine that. I mean,
I can't
10%
either.
of the world would be.
Yeah, but most people who own Bitcoin, they own a couple $100, right? Most people aren't like pushed all in or a high percentage of the portfolio. It's just like, hey, I want to flip 100 into 1,000, right? That's
right. I mean, look, there aren't enough of them for every million. I mean, I think are there 30 million millionaires in the world? I think there are at least 30 million millionaires. I mean, there aren't even enough.
After this inflation, there might be 60. I don't know.
Right. Well, you might be right. But the point is that not even every millionaire can have one coin. I mean, there's going to come a time. I mean, our grandkids or our kids or whatever. I mean, it's, or maybe even just us in 10 or 20 years are going to say, holy shit, you got a whole coin?
Yeah.
What the fuck? How'd you do that?
I'm saying that to people now.
Yeah. even now, it's crazy. It's kind of crazy.
Yeah. Right. I mean, so yeah, it's, I mean, I'm with Foss. I mean, I'm pretty sure these things are going to be worth more than $1 million a coin. Now, it gets really tricky because, if gasoline's $100 and your coin's worth $1 million, I mean, it's, you haven't exactly you've had a lot of slippage in terms of inflation. But the point is, even in today's dollars, I'm sure these things are going up between 10 and 100x today's value. I'm very confident of it.
And you said that it's in the next 6 months, right?
Well, I wish it was in the next 6 months. I mean, that's where I could be dead ass wrong. I mean, this could take longer. I mean, I got into it in 2013. I bought a few, and then I started running, and I bought some. I kind of bought them consistently from 14 to 17. Of course, I really loaded up in 17. The top of and Thanksgiving of 17, I thought it was a genius. I was buying them at 17,000, right? I'm like, fuck, this thing's going to 100. I got to get more of them. So I was, and of course, then it crapped out. The next year was down to 10, and I thought, oh shit. But I doubled down, and then as you recall, the next year, the first part of the following year, it went down to 3,500 or 3,900, and I doubled down again.
Yeah.
And my thought pattern was just, look, this thing's either going to work or it's not. And if you study all great investors, what they all have in common is they have they're willing to take a risk where you can only lose 1x and you can make multiples of 1x. And so if, depending upon what you think the probabilities of the thing working are, and I was a venture capitalist before I got into the sound money trade. If you think, it's a great model where if something can make between 2 and 100x on the upside and all you can lose is 1x, even if it's not a certainty, if you get enough bets that look like that and some of them work, you're going to get way ahead. And so that's the thing that's, when I doubling down, I thought, well, look, I'm in for this amount and I can afford to lose that. And if I paid 17 for one of these, I should certainly pay 3,500 for the same number of them. And I just bought that and I just sat there for a long time. And, it took a while. I mean, there were a bunch of years where really, didn't go much of anywhere. And it was kind of bouncing around, between 3 or 4 and 7 or 8, for much of 2019, 2020. But then, of course, it caught fire again. And that'll happen again. I mean, it's the pattern, in something like this, my observation is the best way to trade an asset like this is you look at you look at how it's traded in the past. And the hardest thing about this asset is that you can have these 70 or 80% drawdowns. And obviously, if you get shaken out of them, and that's why I think it's very irresponsible when people say, well, go get levered up and buy this damn thing. I mean, no. You got to understand what it is. You got to understand what it might do.
Yeah.
And when I get people interested in it, I always try to tell them to dollar cost average into it, or to buy when the Meyer multiple is in their favor. And that's I'm sure you guys are familiar with this. It's on Twitter called, if you Google Tip Meyer, TIP Meyer. The Meyer multiple is the 200-day moving average. And
Tip
look at
being
the price.
The Investors Podcast. I want to make sure.
Yeah,
Dig it.
right.
Preston
Exactly.
Fish made it with Trace Mayer.
Yeah. So basically, you look at the price compared to the 200-day moving average, and right now, we're in a zone where it is compared to its 200-day moving average in the entire life of Bitcoin. It's only been this cheap 4% of the time. So in other words, 96% of its life, Bitcoin has been more expensive compared to its moving average. That's a buy. I mean, that's now, and I've been I kind of consistently DCA through, I use Swan, but every week I buy some. So, but it's hard. I mean, look, you would never want to have all your money.
You should try Coinbase.
You should absolutely try Coinbase.
Okay, I will. Yeah.
No.
Are they one of your sponsors? I know of them. And I've been on their thing a couple of times. They're good folks. I like them. In fact, I met them at I was at BitBlock Boom, and I met them. I really like them a lot. They're good guys.
Coinbase?
Coinbase.
Oh, you say Coinbase or Coinbits?
Coinbase.
Oh,
Sean.
Coinbase.
Yes, Sean.
Christ, Sean.
Why would we ever recommend Coinbase? Sean,
Mute him, Craig. Can you mute him?
I'm
Mute
muting
him.
I'm muting him right
Mute
now.
him.
Jesus.
Coinbase is the worst.
Yeah.
Oh my God, the service. That guy's a bad guy. That company deserves to fail.
I hate
hope
Mr.
they do.
Coinbase too.
Yeah.
Rusty, I put your hand down earlier. I thought you forgot to put it down. Sorry. You got another one?
No, I saw you. I saw you put my hand down. I was wondering who that was. Yeah. No. I was asking Lawrence, what other shiny rocks have you been into, or are you like in the gold world? Are you like a gold maximalist?
No. I'm into silver too. So they're different. Silver's got industrial uses.
Do your fellow gold guys call you shitcoiner?
He's not a gold
He's a
maxi.
shit rocker.
I'm not a gold maxi. No, silver's
He's a
good. I mean,
silver.
it's but they're really an apple.
It's like
and an
gold's
orange.
Litecoin.
Yeah, I don't know. There's not really a comparable to yeah. It's, the thing about silver that makes it different from gold. So all the gold that's ever been made, gold doesn't have a whole lot of uses actually, other than jewelry. You know, some people say it's used in industry. Not very much. I mean, really, the gold is used for jewelry, or it's used for money, or antiquities or whatever. So those are the two uses. Silver, on the other, and we got a lot of it. We got 20,000 tons, 200,000 tons. More or less, all the gold we've ever mined in the history of the world is still somewhere being used, unless it got sunk in a shipwreck, right? So you see it in churches, and you see it in, everybody's got it. Silver, on the other hand, we've only got about, so we've got multiple years stockpile of gold. It's a very high stock and a very low flow. We mine about 1.7% of the stock every year. Silver, on the other hand, is something, it's a metal that gets used. It's very good. It's used in medicine, it's used in solar, it's used in electricity, electrical applications, etc. There are a lot of uses for it. And so we don't have a big stockpile of it because we're always using it. And so, we mine about 900 million ounces of silver a year. There's generally speaking about 1 billion ounces of silver above ground. And it's not easy to add capacity like gold. We're mining, it's growing every year, the amount we mine. But the point I'm making here is that there's not a big stock. So more like oil, that's getting used, just a little change in the flow or a little change in the demand, and man, the price goes zooming. So, the typical rule of thumb is silver will kind of do 3x what gold does. So if gold goes up 10%, silver will go up 30%. I mean, they're both precious metals, but silver is kind of the wild child. And, and in turn, in a downturn, silver will go down more too. And if the industrial demand for, in a depression, gold will actually hold its value better because it's something you go to when you're afraid, and your fear of loss is high, you might buy gold. Whereas silver, because it's being used in things, if we have a depression and we're making less cars, less solar panels, less everything, there's less demand for silver, so the price of silver will fall faster. So
we got a question from the chat, Mr. James Lavish.
I know James.
Yeah, he said, ask Larry if he remembers where he was when they discovered gold.
I remember where I was when they discovered gold.
Jeez. Lavish is mad you're just going to lap him in view count.
Yeah, wow, that's a tough question. I don't know. Yeah, I mean, I think gold was first discovered in Turkey, in Lydia, in like 5000 BC. There was a guy.
You remember that?
What's that?
Jesus Christ.
I'm just playing.
Oh, yeah, there was a guy there who was the first guy to pour gold coins,
Crises.
as far as we know. Yeah, exactly. Historically.
Yeah.
Yeah.
So,
but the thing to keep in mind, I always tell gold bugs this is, even before gold existed, man was keeping ledgers. The caves in France, the ancient caves in France with all the cavemen in them. I mean, they have sticks. They were counting something. I killed a few deer. You owe me one. Somebody was keeping score. And really, money is nothing more than a way of keeping score. And so a lot of gold people get hung up on the fact, well, there's no value in Bitcoin because there's nothing physical to it. And I say, yeah, there's a lot of value in it because it's an immutable ledger.
have they ever been to a mining facility? Jesus.
Yeah, right. Yeah, right. It's a lot of work to keep score.
Yes.
So yeah, right.
So, well, I mean, speaking of Coinbits, right? I think Safety works with Coinbits, right?
Yeah, he does. Yeah.
He wrote the book called the Fiat Standard. And It seems like a lot of times, I mean, you've mentioned, right, that the money is broken. The current money that we have is broken. It seems like one of the biggest issues for people to understand sound money, especially Bitcoin, because they think of digital internet money, it's this advanced thing. But one of the biggest issues is just understanding what's broken about the fiat system, what's broken about fiat money in general. What made you understand that the money was broken, or how did you ever get to that point to understand about the money?
Yeah, well, I've read both of his books, and I think they're both great books. Obviously, I think the better understanding of that, well, you can get it out of both, but the Bitcoin standard itself really is what started it, in terms of explaining it to the younger generation. Prior to that, it was the Austrian economists who educated me about the dangers and issues associated with unlimited credit creation, and the lack of discipline that becomes apparent once you start getting into fractional reserve gold and fractional reserve credit. I mean, von Mises and Rothbard and all these guys wrote books, and their interpretation. I mean, the Great Depression is kind of, the economic, I don't know how to describe it. It's like it was the economic Super Bowl of the last 200 years, right? I mean, the Great Depression. I mean, that's what Bernanke wrote his PhD thesis on, and everybody is kind of like, holy shit, the Depression, how'd that happen? Can't let that happen again. And they all had an interpretation
Surprise!
of it. Right. Yeah, it's going to happen again. But they all had an interpretation of it, which is, hey, we didn't print enough money because we could have solved it by printing more money. And the Austrian interpretation of the same event is, no. It was the printing of money that let it happen because you guys created a credit boom in order to, you started World War I. Britain went off the gold standard. So sound money was lost there when the pound was really the world reserve currency. You started a war and spent a lot of money unnecessarily, and then that just continued, and you papered it over, and that created the enormous boom that became the Roaring '20s, which then led to the crash of '29 and all that credit destruction. And it wasn't about not printing enough money; it was that you let the monetary medium become ungrounded, whereas prior to that, throughout the entire 1800s, gold was money, period. And, there was some credit, but there wasn't nearly the credit that existed, following World War I. And so that's really the basis of my understanding that, if you kind of look at the 1800s, and you study it, and economists study it, you see that was a period of time where prices really didn't move very much. I mean, things that cost $10 in 1810 cost $10 in 1890. It's kind of stunning.
Yeah.
And yet, the standard of living. So it was mildly deflationary during that period, and yet the standard of living, the entire world went up enormously, and people were generally speaking kind of dirt poor farmers in 1810. And by the late 1800s, we'd had a mini industrial revolution, and everyone's life, the standard of everyone's life had gone up substantially. And that was all based on sound money. And then, the Fed came along, and Britain went off the gold standard. World War II happened. The Fed came along all at about the same time. And we entered this age of credit inflation, which, it just with each step has gotten worse. I mean, at least, prior to 71, there was a semi-international peg, set up, by the Bretton Woods, agreement, where we had gold and that gold backed the dollar. But after 1971, then there were no restraints. And, you can see all this in all the charts of the growth of the money supply, et cetera. I mean, it's just, there's a great site. I'm sure you guys have been to it, the WTF 1971, right?
Yeah.
What the fuck happened in 1971? I mean, then it really got rolling. And then, of course, 2008 was the next one where they bailed out all the financial players. And then 2020 and COVID was the next one. And, we just got this series of rolling, monetary, mistakes and events, and they keep getting larger and larger. And, the final one is going to completely destroy fiat currency. And mankind is going to look around and go, okay, what are we going to use for money? And the two choices are gold and Bitcoin. And Bitcoin will ultimately be the right choice. But in my opinion, there's a possibility that there's some interim time where gold is used as well.
Now, Larry, before you get any further on that, I want to talk about the future of Bitcoin and gold. And I want to talk about the future of Bitcoin and gold as it relates to the past. And I know you're a historian buff when it comes to economics. I don't know a whole lot about what happened with India and China and the silver standard versus the gold standard, other than Gresham's law, being that sound money pushes out the unsound money. What drove those two countries to use a silver standard when the rest of the world was using a gold standard, and then how did that backfire on them?
Yeah, that's a great question. Safe talks about this in his book, and it's what suggests that ultimately Bitcoin will win and gold will fail. But it took time. I'm not quite sure why those countries made the decisions they made, but I do know that gold was the superior form of money, and it goes back to stock to flow. It was a higher stock as opposed to flow, and that generally is what the hardest money is the money that that has the lowest stock to flow by definition. I mean, that's Gresham's law. we're looking at it kind of through the backwards lens. I'm not quite sure why those countries made those decisions, but they did. And as a result of that, Britain and all the other countries that chose gold as their sound money, really came to dominate, countries that chose silver as sound money. But you have to remember that silver did work at certain times. I mean, there was a lot less gold, and, the Spanish, first the Portuguese and then the Spanish, they had the reserve currency of the world, and they had a lot more silver than gold. So they both kind of worked. And, Dan Oliver, who's done a lot of work on this, and I've had a lot of conversations about the two and why one wins, why the other doesn't. And they both they do tend to trade together. And it's not as though silver became worthless. It just didn't hold its own against gold. And, in the past, a lot of the way people viewed it, I think, was that gold was the money for big transactions and silver was day-to-day money. And because... if anyone's ever tried to pay for something big with silver, you got to bring a pickup truck. Whereas you can put $1 million worth of gold into a briefcase. So silver kind of became the money of the common man, and gold became the money of big transactions. But the point you're raising is a good one, and Safe raised it, and others have raised, and that is that ultimately the hardest money wins, and gold was harder than silver.
And how does that play into what's happening today? And I'm not necessarily talking about Bitcoin. I'm talking about money.
What are you talking about?
I'm talking about commodity money. So
there he is.
recently,
Hi, Rusty.
yeah,
Rusty has a question.
Specifically, Russia getting kicked off of the gold standard.
Okay, Greg, but Rusty has a question.
You know what? You're right. Right.
Or the US
Rusty has a
Treasury.
question. Rusty has a question.
Stop the U.S. Treasury standard.
They're
Yeah,
kicked
it just sounded like he was struggling there for a second, so I thought I'd jump in with my question. So we had a mail-in question today from a colleague that couldn't be with us today. Bitcoin Becca, you might not know her because you currently have her blocked, which we can maybe talk about later in the stream. But I was wondering, she had a question. Her question reads, if he says anything about increasing gold supply, if he says anything about increasing gold production is easy, tell him to shut the fuck up because the mines are seriously struggling in hiring workers. Not really a question, but
and she wonders why she's blocked.
yeah.
No, I would never suggest that increasing gold supply is easy, and yeah, the miners have had a lot of trouble getting workers of late. It takes a long time to go from the drill bit to gold coming out of the plant. In maybe the best case, best case, it's 3 or 4 years, and that's only in certain parts of Africa where permit is easy. In most parts of the development world, it's 10 plus years. You make a gold discovery, the time that discovery starts to make gets into production, is 10 years.
When you're saying at some parts of Africa that the permit is easy, you actually mean like there's no safety guards about the workers and nobody gives a fuck.
Well, not necessarily. Most of the companies who run in that area, it's not good business to not care about your workers. I'm just saying that these countries are actually pretty streamlined, and they know what gold mining is, and they know that. They're looking at people who are dirt poor, who are living on $1 a day, and that if they turn them into gold miners, they're going to have food for their families, and so they don't fuck around. You make a discovery, you go to the mining ministry, you say what you're going to do, you show them a good plan, and they accept it. That process can happen in under a year in certain countries in Africa, whereas that process in Canada is typically 5 years, and it could be the same in the United States. It's actually the same in most developed countries, even Brazil, Mexico.
Due to environmental reasons.
Well, perhaps, but not necessarily. It's not like it's just regulation. It's not like there are a lot of people who have their hands out, to get paid along the way. I don't think the mining that they're doing in Africa is unsafe or environmentally unsound. I mean, most of the companies have committed to international standards, and they get audited, and they have to hold themselves to those. I think it's just a matter of, you know, these. I mean, it's, you know, the other thing is you get greens. I mean, you got. I mean, most places, you know, and even these are in remote places where there's nobody there. There's somebody shows up, some NGO shows up and says, we don't want to mine here, you know, even though it's going to provide employment and it's not going to damage the environment.
Yeah, that's why I mentioned it actually, because in the 10 years of austerity we had here in Greece, like all of a sudden, like a bunch of Canadian gold companies came to Greece and bought like whole mountains to mine gold. So what happened basically is like for 10 years now, everybody around is like protesting about the environment and no gold is mined.
Right, yeah. No, that's El Dorado with the Scurry's project. I mean, it's been terrible. I mean, you know, and it would, I mean, look, there have been, it's not, I'm not saying all miners are great. I'm not saying in the past there haven't been terrible environmental abuses, because there have. But, you know, these companies are very heavily audited. You know, they've got ESG policies, they've got boards of directors, they've been sued many, many times. I mean, you know, these gold mines today are clean. I mean, they are really clean. And, you know, but that doesn't seem to matter, you know, when you've got Greta's running around, you know, fighting you on it, right? I mean, it's, you know, so.
It seems like nowadays with fiat, right, as it's getting closer to going to, you know, hyperinflation or blowing up, that you have to have a crisis to have an excuse to print money. Do you think that we're kind of in the age of endless crises until the money really blows up? Or
I kind of do. I mean, it's, yeah. So let's go to Europe, right? Look what's going on there with all the rate, you know,
Can we put a pin in that? Because I want to add on to Sean's question.
Yeah, sure.
You recently said that we'll do all the wrong things economically before we do all the right things. So I want to see what kind of wrong things we should look out for as you give this explanation.
Yeah, sure. Well, Britain has done the first one, right? So, you know, okay, right. So, you know, Nord Stream shut down, or as our presidential spokesperson said, they shut down Nordstrom.
Did he really?
Did you guys see that tweet?
Wait, who said that?
You didn't see that? Oh, you got to go to my timeline. Somebody said they shut down Nordstrom 1.
Wow.
Oh my God.
The first one?
Would be really pissed when they closed down Neiman Marcus. So the woman who's Biden's press person said that. It was on Twitter. It was hilarious.
Oh shit.
The same woman that said we had like 10,000 million unemployed or new jobs or something. I don't know. Anyway,
people.
So the point is that where was I? So Europe's a mess. And electrical costs are going crazy, and we're all seeing these tweets from people who own pubs and you know, businesses in England, and they're all seeing, you know, 3, 4, 5, 6x increase in their electrical costs. I mean, they're going to go bankrupt if they can't get subsidies. And we now have a new female prime minister in England, and she comes in and she does what probably is the right thing to do. I mean, she really has no choice. And she said, look, you know, the government is going to subsidize everybody. And we're not going to, you know, you're going to pay your first 2,500 electrical bills, and we're going to pay the rest. And, you know, that's going to cost us 130 billion pounds. And we're going to do it for at least 2 years.
For now, it'll cost that much for now.
Well, that's the point, right? That's the really good point. And that happens to be 5% of GDP, which of course we don't really have, but we'll print. And, you know, the 5% will become 10%, and the 10% will become 15 or 20%. And, you know, and it'll seem normal. And a policy enacted like that, it's like you can't take it back, right? Yeah. And so, you know, so now, I mean, and you're doing it by printing money, rather than trying to figure out a supply response. Would be, okay, no, how about we have a Manhattan Project where we try and build 50 nuclear reactors and generate a lot more electricity out of something that's safe and cheap, like nukes. You know, so the problem is, you know, you get people conditioned to this. I mean, we had all those gifts that we gave out during COVID. You know, now we just canceled a lot of student debt. I mean, you know, they're coming after the rest of the student debt, and that'll get canceled too. And I mean, pretty soon everybody's got their hand out, and the government can't really say no. And so, I mean, you saw California was talking about they were going to hand subsidy checks to people to help pay for high gas prices.
Yeah.
You know, I mean, it's like, and they're, you know, we're doing spending bills to fight inflation.
Yes.
With money that we don't have.
Makes total sense.
Yeah, right. Makes total sense. So we're well into the point at which all of these things are going to seem normal and justified. And my sense is they're only going to get larger. And as they get larger and larger, I mean, here's the point, guys, that and women. Here's the point. When people realize that the government policy can never stop printing money, and that the money is, as Greg Foss says, programmed to debase, and will continually lose purchasing power, that's when Gresham's law kicks in, which says, get your ass out of that shitty money and put your savings into good money. And Bitcoin is the best form of good money. Gold is the second best form of good money. And so, you know, and bonds are probably the worst form, the worst investment in the world. And that's the other thing. I mean, you've got all these critical moving pieces, one of which is that, you know, bonds and interest rates are going up. And the U.S. government has $30.8 trillion worth of debt. And its average, you know, maturity is 3 years, and the average rate on it used to be under 2%. So, you know, it was livable at $400-500, you know, billion in interest a year. Well, the average interest rate goes to 5 or 6%. Multiply that times 30.8, you know, you're at 1.2 to 1.8, you know, billion dollars a year, or, you know, in interest. I mean, I'm sorry, $1 trillion a year in interest. And so you're just going to blow the budget up further. Well, and so, you know, who's going to pay for that? Well, we're going to pay for it because we're going to print the money, which is going to make the inflation worse, which is going to make the guy who's holding, and so these bonds are going to start to get sold, and that's going to make interest rates go higher. So, you know, what I'm describing here is what I refer to, and a lot of people refer to, it's a doom loop. You know, as the problem unfolds, it gets worse. And then what they do to try and help it, which is, you know, print money to buy the bonds, that makes the inflation higher. And then they have to print more money to buy the bonds, which makes the inflation higher. And you can see where this is going. Ultimately, inflation becomes infinite. I mean, this is...
While you were talking, in my head, I listened to this music like... Yeah,
that's right. Yeah. It's
a clown show.
It is a clown show, but you know, at every step of the way, they don't do what's right. They do what's expedient to try and kick the can. The problem is that these things, they all just start to accumulate, and so you get into the.
I mean, isn't that what we see in Europe, right? In Europe,
right?
They all believe Greta, and they shut off all of their own oil and gas,
right?
And they depend on Russia for all of that, who is a possible threat at any time.
Right.
And then they decide, okay, we're gonna sanction our source of energy, which is Russia, and they don't think that that they will have no backlash from that.
We never had actually, like a great source of gas, and like Germany's problem was historically always like to find energy, like they never had the oil, right?
Yeah.
Right. No, that's right. And so, you know, the problems are starting to pile up on them, and they're starting to come faster, and and with each iteration they get larger. I mean, in 2008 we printed $3 trillion. It took 3 years to do it, 3-4 years to do it. In 2020 and 2021 we printed $4 plus almost $5 trillion, and we did it in under 2 years. I mean, the next one we're going to have to print $10 trillion and probably do it in a year. You know, right? I mean, when the U.S. bond market starts to fail, these interest rates start to go up, the Fed's going to step in and say, we can't have this. We're capping the yield at 3%.
The contractions are getting closer, is what you're saying.
Yeah, the contractions are getting close. That's exactly it. That's what Preston says. I love that. Yeah, and so you know, the bond market say, great, sold to you, Fed. Well, what happens when the $30 trillion bond market goes no bid, and the Fed has to buy it? So now the Fed's balance sheet's not $9 trillion; it's $39 trillion. So now everyone's looking at.
Didn't it go no bid recently?
What's that?
Didn't it go no bid recently in the last year or two?
Yeah, it did. In March 2020, it went no bid. Yeah, I mean, and that's what brought in, you know, Powell pretending to be Draghi and said whatever it takes. Yeah, and it's been poorly bid since then. I mean, there've been, you know, it's thin and it's going in the wrong direction. So, you know, it's coming. I mean, you can just kind of see it coming now. You know, to us it might feel slow, and to those of us who are in this trade, it's kind of a pain in the ass because we're in one of those periods right now where the shit's going the wrong way. I mean, nobody likes, you know, a $68,000 asset that goes to 17.5. But
Unless you want more of it.
Unless you want more of that thing.
well, that's right.
You're
No,
trying
that's
to
exactly
accumulate.
right. Yeah, no, that's exactly right. I mean, in a way, Mr. Market's giving us a gift, but
Yeah.
for people who came in late and chased it to 68, they're being tested. Will they hang on and double down, or will they? Certainly, hopefully, they won't blow it out. At a minimum, they'll just hang in there.
So you made a good point. We went from 68 all the way down to, where are we today? About 19.2 something.
19.3 is what I got, but it was 17.5 briefly. And I think we could go into the 14s. I mean, I feel like there's another stock market, bond market, March of 2020 coming as they continue with this hiking and tough guy campaign.
So do you have some free cash sitting on the sidelines for that?
I do. Yeah, I do.
You think they're just going to hike till they break something? Is that kind of
my belief? I mean, or until they really start to see inflation going down. I mean, they realized when they saw what gold did and what Bitcoin did. I mean, they realized it was an existential threat. I mean, Powell's worth $100 million. Well, if they lose if the dollar collapses or loses its value, he knows he's dead. And so inflation, scared the living shit out of him. And having a 1929 and a bunch of unemployment, he doesn't like that either. But in his mind, the lesser of two evils is to get this damn inflation under control. And he's intending on doing it. And he will continue, in my opinion, he will continue to be hard and keep jacking rates until such time as either the inflation really does die down or it just becomes untenable and something breaks. At which point, then, I mean, so their mandate is low inflation, full employment, and financial stability. And they've got close to full employment, although that'll be changing. Inflation's way out of control, and things look kind of financially stable.
Do you think unemployment numbers are fudged like the CPI?
Oh yeah,
of course,
absolutely. Everything's fudged.
Yeah,
absolutely. I mean, they don't count it the way they did. I mean, Shadow Government Stats has great numbers. I mean,
love that site. Yes.
Yeah. Right. Yeah. I mean, it's they've got all these discouraged workers, et cetera, et cetera. I mean, it's look, none of the numbers are real. That's why I go back to what do you want to hold for 5 or 10 years? Forget the numbers for a minute. Just think about it. Just on basic principles, what do you want to hold? I mean,
Boobies.
A car will be a car, a house will be a house, tools will be tools, weapons will be weapons, food will be food, and then financially, what's money? I mean, the dollar's not money. The dollar is a bunch of shit. Money is gold, money is silver, money is Bitcoin. That's, keep it really simple, and don't obsess on the daily mark-to-market price. That's just a bunch of bullshit based on all their narratives. And we know, if there's one thing we know, I mean, if one thing is this whole nation has probably been educated on the last 2 years more than we ever were in the past, they're all just completely lying through their teeth. It's just complete and utter bullshit. I mean, look at how they fooled us with this, get us all upset about the flu. I mean, it's fucking ridiculous.
They need a reason to print money.
Well, that's right.
Mm-hmm.
That's right. I mean, the next one could be war. I mean, who knows? I mean, certainly, if they were halfway intelligent, one, they would never have driven Putin to do what he did, and then two, now they'd be trying to work out a deal with him to sue for peace.
I think Putin was going to do what he did no matter what.
That's possible.
It's a geographic and demographic equation for me.
Yeah, that's very possible. But it certainly didn't help that, we broke all the promises we made post Gorbachev. I mean, and we behaved in a very aggressive fashion,
True. Now, you mentioned that...
we have missiles in Poland for the terrorists in Arabia. Exactly. Not for you guys. It's not for you guys.
That's right. That's exactly right.
No. We're pointing them in down south.
I'm glad Yellow said something because I wanted to get to Yellow. We're in a bear market right now in Bitcoin, and I don't know if you know this, but there are specific rules for bear markets with regards to Twitter, and I want to make sure that Yellow elucidates those for you so you can act appropriately in the near future.
Oh yeah. So Larry, I don't know if you know, but I have after some years in this space, I have 3 rules that I go by during the bear market, which are: number 1 is obviously stack. You got to stack Bitcoin. Number 2 is we are Bitcoiners and we love to fight, so you got to fight somebody. Doesn't matter the reason. Fight.
Fight. Pick a fight.
We raise the saltiness levels and we fool those algos to see that maybe this is a bottom, from the fighting. And number 3, and most important, is build. And if you don't know how to build, just tweet about it. It's basically the same thing.
Exactly.
Those are the rules.
Yeah, no, those I like those rules. I'm on board for all that.
Excellent. So when you start a fight tomorrow, make sure you tag Yellow at ICO Offender 2.
Okay.
And that way he can document the fight.
I say he starts a fight with Becca. Let's get this fight going.
He already blocked her, so that's the fight started. Now, the other thing that we need to address is that we're getting towards the end of our hour, and you've been very generous with your time. I appreciate that. RD,
I got a last question before RD.
Okay, go ahead.
Very quick. Larry, as a gold guy that understands Bitcoin, right?
Yeah.
How mad does Peter Swift tweets make you?
Oh, pretty mad. I mean, he's a dick. I mean, I just, my only the only conclusion I can come to is just that he's not very bright. And I actually was on a panel with him way back when I was at one of these conferences, and I didn't like the guy very much. He's pretty arrogant.
Yeah, because we see the guy, we see the tweets, and we laugh about it, right? But you as a gold guy, aren't you like a little bit, dude? Come on, you like kind of representing us, and you making us feel like fools.
Yeah, he hasn't really evolved very much. I don't think he's very smart. I mean, that's kind of, and it's funny because I used to think he was generally pretty smart. He had some good comments on the gold space. It's not like, I would not have known that, and I would not have come to that conclusion until I saw how he handled Bitcoin. But, anybody who's in the gold trade who didn't, who studied Bitcoin and doesn't get it, in my opinion, they're morons. I mean, they're not very bright. So
lower tier IQ.
What's that?
Lower tier IQ.
Yeah, I mean, lower tier IQ. Yeah, I mean that, and it also. I mean, I'd say the one trend I've seen more often than another, people who don't get Bitcoin tend to be pretty arrogant people. It's if you've got an inquisitive mind and you're open-minded, once it's explained to you, it kind of becomes obvious. So,
yeah.
But and that arrogance often kind of blends into the old, they're paid nicely not to understand it. They're threatened by what it represents, and therefore they're better.
And that difference, it's so clear when you see very bright people that do understand Bitcoin, how humble they are.
Right. Well, maybe. Yeah. I mean, yeah. I think some, and ironically, I also think some of them understand it and recognize what a threat it is, and therefore they hammer it, and they actually do get it. And for all I know, that Peter's one of those. He actually gets it and understands it, but he views it as a threat to the business he's, to what he's done for his whole life and the business he's built. And my view is, you get new information, you change your opinion.
All right. Well,
why he's worried though much? He has diversified it through his son, so why? I don't get it. Anyway, RD.
Well, speaking of lower tiered IQ, RD has a question.
Wow.
It's been a bit high IQ so far, so let's bring it down a bit.
Yeah, let's bring it down. Way down.
Okay, Larry. If the meme factory did exist, and we all know it doesn't, which one of us would you like? Which one of us would you retweet? And which one of us would you mute?
I like all you guys. I don't know. That's not really a fair question.
This is not a fair question show. Just make decisions.
Yeah, no, I know. I get it. But I just... No, I mean, it's like...
The obvious thing is you mute Becca because you have to block.
Obviously, yeah. You block Becca, just mute her.
Yeah, I mean, I think you guys have a great sense of humor, and I think you're all a bunch of good people. So, and if you're Bitcoiners, you're my friends. I mean, the one thing I've noticed, I'm sure you guys have noticed this too. I mean, I can't really point to anybody who I've met who's a Bitcoiner that I don't like. it's kind of like, I mean, everybody's a little different, but there's a certain, when there's a certain, once you find a Bitcoiner, you kind of know what you're dealing with, I think. And it's a good thing. So to me, if somebody's a Bitcoiner, I just assume the absolute best about them.
So who would you like? Who would you mute?
Who would you like? Who would you mute and who would you retweet? You got to answer the question, Larry. You can't
I got to answer the question?
Yeah, you got to answer.
Yeah, gun pointed to your head. There's no, you got to make it.
And it's going to stick with you forever.
That's not fair.
No, it's going to stick with you forever. You always figure it out.
We'll remember.
Yeah, we'll remember.
I don't know.
If it makes it easier for you, I hate your shirt.
Yeah, that's fine. It's orange, man. It's orange built. This is my Bitcoin shirt.
Whatever you do, just don't say Greg because he always gets chosen.
Well, I always get muted.
I gotta say honestly, I was gonna pick Greg as the guy I like. So
that might be a first.
All right, wow. He likes Greg.
Yeah.
Who'd you retweet?
Probably you.
All right.
Hey, let's go.
Yeah, I don't think I'd mute any of you guys. I mean, you're all good guys.
We'll just say that you'd mute Becca. How about that?
Yeah.
Well, yeah, maybe. I don't know what Becca did to piss me off, but it must have been legit because I
could have been anything.
Yeah, it could have been. I mean, I tend to.
Maybe like boomer jokes.
Maybe Sailor talk.
It could have been a boomer joke, or it could have been a swipe at gold bugs. I don't know. I mean, I just. Look, life is too short, and when on my Twitter feed, when I get people giving me shit, I just like, boom, you're done, blocked. Yeah.
Right. And then moving on to the next most important part of the show is Sean's question.
Okay, this isn't a question. This is an invite, Larry. Just as you may know, Bitcoin halving is coming up in 2024.
Yep. About
18 months from now. And we are having a party. The Meme Factory is throwing the halving party in 2024, and we're throwing it in El Salvador. I was just down there. We have the venue. I was hanging out with Max and Stacy. They're coming. So come on down. You're invited. Bring your family. We'll have a good time. It's going to be a blast, and we'll celebrate the halving.
What time of the year? What's the calendar time of the year, you think?
It's going to be like March or April of 2024.
I'm in. I'll do it.
Yeah, and then one more thing.
Yeah.
After this halving, Bitcoin will officially have a stock to flow harder than gold.
I know that. I'm very much aware of that. Right now, they're about equal.
Yep.
Yeah.
So,
no, Bitcoin, and look, Bitcoin's going to win. I mean, there's just no doubt about it. But the reason to hold gold is the lower volatility. I mean, I got a lot of clients who are very old, and they can't deal with an asset that goes down 50%. And the max drawdown on gold. The max drawdown on gold, historically, kind of looking back over a bunch of years, tends to be kind of about 20% a year, and you very rarely get 2 years back to back. So,
it's understandable, if you're a little bit older,
especially now.
Yeah, but if you're younger and you can withstand those drawdowns,
if you can handle the volatility, I'd be 100% Bitcoin. There's no question.
Yeah.
I mean, if you got a long time preference, why you don't need gold.
Yeah, I look at my parents and I go, they have some Bitcoin, but they're definitely not all in, right? Because it doesn't make sense.
You don't need to be all in. That's the other thing. Because of the optionality and the asymmetry here, I always just say get off of zero. 1% is way too low. You got to get to at least 5 or 10%. And then if you want to get aggressive beyond that, great. You're going to be super rich. But, it's everyone picks their own number.
Yeah. So halving party 2024.
I'll be there. Yeah, give me the invite. I'll be there.
Have you been to El Salvador yet?
No, and I'm tempted. There's a conference. I'm going to Pacific Bitcoin, the Swan thing.
Yep.
And after that, Foss is going down there, and he asked me to go with him. And I'm thinking I might go down there after that.
You should go down and check it out. I mean, if you don't, at least come down and at the halving party.
Yeah, I was going to say the halving party in March, April. That'd be pretty easy. In the wintertime, I'm in Florida, so it'd be easy to fly across, get over to El Salvador sometime.
Yeah, it's really cool what's going on down there.
I'll bet it is. I've heard that. And I'd like to see it.
There's still a lot of education, right? People are going to be normies. So, but it is really cool what's going on.
Yeah, it's also cool that you came here, man, and we really thank you for the time.
Oh, I enjoyed it. It's a blast. You guys are fun. You know?
I'm going out to buy some paper gold right now.
Yeah,
Marcus, you have a question, maybe, Marcus?
Yeah, Marcus, you came in late. Do you have a question for him?
Yeah, I came in way too late. I'm sorry, guys, for the late break-in. I don't know if the question's been posed already, but I was just really curious about like that whole executive order report that came out today. I wanted to
we talked about it.
Get out of here, Marcus.
Okay.
Get out.
It's a good thing I didn't ask it then.
Yeah, we talked about it.
Watch the restream.
Scroll up.
Yeah, there was some good, there was some bad, there was some good, and there was some bad in that report. Yeah.
All right, so Larry.
Hey, thanks a lot for coming.
We're at the end here.
Oh,
I want to make
it
sure.
was fun. Like I say, it was fun, guys. I come back anytime, and Greg, I hope we can link up when I'm in Naples in the wintertime. So.
Oh, absolutely. I mean, we're gonna have you back on. I only got through like half the questions I want to ask.
All right. Well, reach out and we'll schedule something else, and don't give me your contact information and ping me in January. I'll be there. All right.
Absolutely. Now, before you get out of here, I've got your Twitter bio and your fund website linked in the show notes.
Thank you. Appreciate that.
Can you tell anybody else where they might want to find you?
That's it. I mean, if you go to the website, there's a lot of free information there. You can get on our mailing list. We won't spam you. We just send you macro stuff that we write on our quarterly reports. And we are accepting new investors. I mean, just small advertisement. Unfortunately, because of the SEC rules, it's accredited only. So the minimum account's $100K. But we're always trying to grow our fund and feel like we're a pretty good alternative if somebody's looking for a place to park money to protect against monetary debasement. That's really what our mission is.
All right.
Oh, yeah.
Well, Larry, thank you again for coming.
Oh, thanks, guys.
Appreciate your
Appreciate
time.
your
Enjoyed
time,
it. Yeah, it was a lot of fun. We'll talk soon. We'll see you.
Hello, ladies.
Good night, everybody.
Bye.